the EV dream high hopes and early adopters. Electric vehicles, or EVs, were once a niche market. Early adopters, excited by new technology and environmental benefits, embraced them. Tesla, with its sleek designs and impressive performance, led the charge. Traditional automakers, witnessing Tesla's success, rushed to join the EV revolution. Investment poured in, and ambitious production goals were set. The future of transportation, it seemed, was electric. The initial wave of excitement led to long waiting lists for popular EV models. Consumers, eager to embrace the electric future, were willing to pay a premium for these cutting-edge vehicles. Governments offered incentives, further fueling demand. However, like any emerging technology, the road to widespread EV adoption is rarely smooth. The dream of an all-electric future, while still alive, would need to navigate a course through choppy waters. Oversupply and cooling demand, a shifting landscape. The EV market is experiencing a significant shift. Initial high demand and low supply have given way to an oversupply of vehicles and a softening of demand. This change has left dealers grappling with overflowing lots and mounting pressure to move inventory. Economic uncertainty, rising interest rates, and inflation have made consumers more cautious about big-ticket purchases. EVs, often priced higher than their gasoline-powered counterparts, have become less attainable for some buyers. The once strong government incentives that made EVs more appealing have also begun to dwindle in certain markets. Adding to the complexity is the increasing variety of EV models available. Consumers, faced with an expanding array of options, may find themselves delaying their purchase decisions, further contributing to slowing demand. This combination of factors has created a challenging environment for dealers. Price wars and consumer hesitation fueling the crisis. The oversupply of EVs has ignited fierce price wars among automakers. Desperate to move inventory, companies are slashing prices, offering substantial discounts, and sweetening deals with added incentives. While this may seem like a win for consumers in the short term, it creates long-term challenges for the industry. Consumers, bombarded with news of falling EV prices, are becoming increasingly hesitant to commit to a purchase. The fear of overpaying or missing out on an even better deal is driving potential buyers to delay their decisions. This wait-and-see attitude further exacerbates the inventory glut and puts downward pressure on prices. The price war also erodes the perceived value of EVs. When prices fluctuate dramatically, it creates uncertainty and undermines consumer confidence. This vicious cycle of oversupply, price wars, and consumer hesitation is creating a perfect storm for dealers. The Mach-E and Lightning strike high-profile examples of declining sales. The challenges facing the EV market are evident in the declining sales of even the most popular models. Ford, for example, has experienced a significant drop in sales for both its Mustang Mach-E and F-150 Lightning. These two vehicles, once hailed as game-changers in the EV market, are now facing the harsh realities of a cooling market. The Mach-E, Ford's answer to Tesla's Model Y, initially enjoyed strong sales. However, as competition intensified and economic conditions worsened, demand began to wane. Ford responded by cutting prices and offering incentives, but these moves have done little to stem the tide of declining sales. Similarly, the F-150 Lightning, Ford's electric version of its best-selling F-150 pickup truck, has also experienced a significant drop in demand. Despite initial excitement and a large backlog of orders, Ford has been forced to reduce production and lay off workers at its Lightning factory. Dealer lots overflowing, the growing inventory conundrum. Across the country, dealer lots are overflowing with unsold EVs. What was once a trickle of inventory has turned into a flood, as automakers struggle to adjust production to match slowing demand. Dealers caught in the middle are feeling the pressure. Storage space is becoming a major issue for dealerships. EVs, with their larger battery packs, often require more space than traditional gasoline-powered vehicles. Dealers are now faced with the dilemma of either expanding their storage capacity at significant cost or refusing deliveries from automakers. Automakers, facing mounting inventory costs, may be forced to further cut production, impacting jobs and supplier networks. The oversupply of EVs is a clear indication that the market is not absorbing these vehicles at the rate many had anticipated. The service center struggle, EV maintenance challenges for dealerships. While dealers grapple with overflowing lots, another challenge is brewing in the service center. Maintaining and repairing EVs presents a unique set of challenges that many dealerships are ill-equipped to handle. EVs, with their sophisticated electric drivetrains, high-voltage battery packs, and complex software systems, require specialized tools, training, and expertise. Traditional mechanics, accustomed to working on internal combustion engines and conventional transmissions, often lack the necessary skills and knowledge to service EVs effectively. Training existing staff or hiring specialized technicians comes at a significant cost. Dealerships, already facing financial pressure from declining EV sales, are hesitant to make these investments. This service gap poses a major challenge for the widespread adoption of EVs. The profit pinch squeezing dealer. Margins and enthusiasm. The declining EV sales and the challenges associated with selling and servicing these vehicles are putting a significant squeeze on dealer profits. Margins, already thin in the automotive industry, are being further eroded by the need to offer substantial discounts and incentives to move EVs off the lot. Dealerships make a significant portion of their profits from after-sales service and maintenance. However, EVs with their simpler electric drivetrains and fewer moving parts require less frequent and less complex maintenance than their gasoline-powered counterparts. This reduced service need translates into lower revenue for dealerships, further impacting their bottom line. The combination of lower sales margins, reduced service revenue, and the need for costly investments in EV-specific equipment and training is dampening dealer enthusiasm for electric vehicles. Many dealers, once eager to embrace the EV revolution, are now questioning the financial viability of selling and servicing these vehicles. Rethinking investments, the uncertain future of EV dealerships. The current state of the EV market is forcing dealerships to rethink their investment strategies. The uncertainty surrounding EV sales, coupled with the challenges and costs associated with selling and servicing these vehicles, is making some dealers hesitant to commit fully to the electric future. Dealerships face significant costs when adapting their facilities to accommodate EVs. Installing charging stations, upgrading electrical infrastructure, and purchasing specialized tools and equipment require substantial capital investment. These investments are often made with the expectation of increased EV sales, but the current market slowdown is casting doubt on the return on these investments. Furthermore, the rapid pace of technological advancement in the EV sector adds another layer of complexity. Battery technology, charging infrastructure, and software systems are constantly evolving, requiring dealerships to make continuous investments to stay up to date. This constant need for upgrades and retraining can strain dealership resources, especially in a climate of economic uncertainty. A crossroads for EVs, adapting to market realities. The EV market is at a crossroads. The initial wave of enthusiasm and hype has given way to a more sobering reality characterized by oversupply, price wars, and consumer hesitation. The industry, both automakers and dealerships, needs to adapt to these changing market dynamics to ensure the long-term viability of electric vehicles. Automakers need to carefully assess their production targets and adjust them to align with actual demand. Ramping up production too quickly, as we've seen, can lead to an oversupply, price erosion, and ultimately, damage to brand value and consumer confidence. Dealerships, on the other hand, need to focus on enhancing their capabilities to sell and service EVs effectively. This includes investing in training for their sales and service staff, upgrading their facilities to accommodate EV-specific needs, and finding innovative ways to manage inventory and control costs. The electric road ahead, navigating challenges and opportunities. The road to an electrified transportation future is not without its bumps and detours. The current challenges facing the EV market, while significant, are not insurmountable. By acknowledging these challenges head-on, embracing collaboration, and adapting to changing market realities, the industry can navigate this turbulent period and emerge stronger on the other side. The transition to electric vehicles is a complex and multifaceted undertaking. It requires a fundamental shift in consumer behavior, significant investments in infrastructure, and ongoing innovation in battery technology, charging solutions, and vehicle design. Despite the challenges, the long-term outlook for electric vehicles remains positive. Concerns about climate change, advancements in battery technology, and government regulations aimed at reducing emissions are all factors that will continue to drive the adoption of EVs in the coming years. The key to success lies in learning from the current market dynamics and adapting strategies accordingly.